Welcome back. A busy day for markets and global central banks, that's for sure. The Bank of Japan making no change on interest rates overnight. However, the bank announcing a target for government bond yield. This coming ahead of the Federal Reserve decision today at 2 p.m. Eastern. Joining me right now is J.P. Morgan Private Bank Global Head of Equity Strategy, Stephen Rees. Stephen, good to see you.
Great to see you.
So the change is, no consensus. The consensus is no change, rather,
for the
Fed today.
Yeah.
Do you think there's a chance that they say something or do something that actually moves markets?
I think there's always a chance that they raise this month. We don't think it happens. Our case is still for December, but I think you probably have a hawkish hold, meaning that they talk about all the pieces of the economy being in place, the jobs picture looking pretty good. And so we think it's probably more likely to be December. Again, doesn't really change our outlook on markets. We've been expecting this all year. We think they should raise. We think the economy can support it. But it does have some implications in terms of how we're investing across sectors in equities.
Did you see the line yesterday that hit the tape from Bill Gross? So Bill Gross says, better chance of Fed hike tomorrow than markets expect. He said that yesterday during market hours. It actually moved markets. He was talking about a better chance because nobody thinks that the Fed's going to move. But, Anthony, you have a really important take on this.
Well, listen, one, I think it's very unlikely because of what I said earlier. 60% of the market thinks it's not going to move. They've never moved when that's happened.
Yeah.
But secondarily, I think we both agree on this, if they just have a hawkish statement, that will cause the markets, what Dagan was saying earlier, will cause the markets to move anyway. And I think they get away with that.
That can do the work for them, and
exactly.
That's half the game.
There's been some tightening since Labor Day. The Dow, I think, is down almost 2%. The yield on the 10-year has gone up a little bit.
We've seen higher LIBOR rates, which I think has taken some of the pressure off of what they need to do. And I think the market expectation is for a December hike. Today or December doesn't really change a whole lot. We would be buying any pullback in the broad U.S. markets that we see because of it, because ultimately we think it's a good thing.
So yesterday, Bill Gross, let's raise rates by 25 basis points in September.
Yeah.
Market not expecting anything. There's a better chance of a Fed hike tomorrow than people expect.
Yeah.
Yes, he moved markets with those comments.
Yeah.
But at this point, what is that going to do anyway? What is the 25 basis point, and what is the language that, higher rates coming?
I don't think it does a whole lot. It probably shifts some of the composition of this year's performance away from the bond proxies like telecom, utilities, and consumer staples that look expensive, that have done so well. And I think you should be careful about buying those today ahead of a potential Fed move, either today or December. Okay. And we think it probably leads to a revaluation across some of the more growth-oriented sectors, because ultimately the Fed moving is an indication that the economy is on solid footing.
So those markets come in, or those markets?
We think those sectors could come in a bit, and we think there's going to be a revaluation. There has been already third quarter to date, and that's ultimately which keeps us modestly bullish on the broad market over the next 12 months, is that if you look at technology, consumer, discretionary, even healthcare, the areas with growth actually don't look expensive.
I was just going to say quickly, the bigger implications for a sudden move today would be political. If whatever happens in the markets directly impacts potentially how people vote. 8 years, it's not a distant memory, and we remember what happened in September 8 years ago. I mean, it's not anywhere near that, but again, you really don't want to cause market volatility just so close to an election.
It's a good sign, though. There's no recession on the horizon. Do you agree with that?
We agree. I mean, that's been our call all year. That was our call in January and February on the pullback. We just haven't seen the level of recovery or the imbalances in the economy or an asset price bubble that would necessarily, normally cause a recession.
All right, we'll leave it there. Stephen, great to see you. Thank you so much.
Thanks.
Stephen Rees, J.P. Morgan.